Dear ladies and gentlemen, it's my great pleasure to welcome you again to our Energy Forum 2021 that is being presented to you by the Estonian Chamber of Commerce in Lithuania, the Polish-Lithuanian Chamber of Commerce in Lithuania, PRIMUS law firm, and our dear partners, the Polish and Estonian embassies, as well as our dear and very important sponsor of the event, a provider of green energy in the Baltic countries, ENEFIT. I'm your host, Robert Juodka. Today we will concentrate on markets, financial markets and energy markets. What impact does the energy have on financial markets, on capital markets, commodities markets? What is happening there? We have been covering these issues for a while now in the aspect of electricity energy mostly, partially gas. Now let's talk about oil as well and other commodities that are being directly influenced by the new developments in the energy markets worldwide. So the topic of today is will energy remain a challenge for 2022? And our distinguished speaker on this topic here today is Mr. Marius Dubnikovas, financial analyst, expert, known market specialist, and also now chief financial investor officer at Mandatum, if I'm
now in Compensa Life.
Compensa, yes, sorry, that was your previous post.
Yeah.
At Compensa. Compensa Vienna Insurance Group. So, in fact, Marius is really a person who does not really need introduction, at least in the Lithuanian financial market. Everybody knows him for at least last 20 years. And he's the most renowned expert in the areas of commodities and financial trends in public markets, as well as a very renowned financial analyst. So without further ado, Marius, what is your view how the markets in connection to energy resources and commodities will develop in 2022?
Well, in 2022 we will have a huge challenge with commodities and energy. It seemed like just 6 months ago that the situation might be better and it might change to the better side, but right now everything is turning to the worst side. We have very interesting situation with oil and gas sector because the Brent oil that is being used at this part of the world, well, it jumped quite sharply this year. So the change of the price was something above 50%. Well, luckily a bit with the oil, it is being held right now below $80 per barrel because we have a challenge also with the COVID. And right now, if we would open just Bloomberg, we would see the key articles are about COVID, Omicron version, new version of COVID, and it holds a bit the oil price for the last 1.5 months. If we wouldn't had this new version, probably we would see that the oil price would be above $100. But right now it's a bit standing in one place. And if the situation with the COVID will ease, and it will definitely ease probably in few months, in next year we can see the new oil prices that are much higher. We have seen a very interesting situation that the oil price is tolerated by OPEC, by the countries that are exporting this good, this commodity. And I thought in the past that OPEC should stand in the market and make a pressure on the price because they should be interested in stable pricing. But the last month's meetings showed that they are not very keen on increasing the output of the oil, which means over the winter we will have quite huge prices. And it seems like they are going to take every oil dollar they can right now and just to have quite a good earnings from that. The situation might change a bit in May, probably when the oil usage is going down. But right now it seems very strange, and it's very hard to forecast what the price will be. I would rather say that.
But your trend, your view is that the trend is going up, essentially. That is your view.
I would say that if we wouldn't have the situation in London with the Omicron, we would really would have the price of oil above $100. And it seems like that it might be that it will test that level if nothing will happen. But right now it's very hard to forecast because the situation is changing very rapidly. And what the signals are from OPEC. So probably there are two trends that are holding the price. The one is pushing down this Omicron, but from the exporters of oil, they are pushing up. So we have two forces. And if one force, which is probably temporary with the Omicron, it will vanish, probably we will test $100. I was very sure, at least in October, that we are going to test that. But well, a bit situation changed, and I think that this was postponed. We can see the trend of oil probably in the gas sector, because the gases, it seems like there is no end for the increase of the price. Just right now, I just watched the Amsterdam exchange, the TTF index that shows what is the price or spot price of the gas, and we see that the gas price in Europe is going to €1, 1.5 euros per cubic meter, and so this trend shows what might be with oil as well. But as I said, it is being a bit damned because, well, the gas consumption is not harmed by COVID, you know, because we have winter outside and we need to use gas. There's no option. And with the oil, of course, we will travel less, and we are traveling less. The airplanes are landed majorly, and so on. So these are two parallels that show how the energy carriers might cost. So the gas shows the real situation. Probably there is also, not probably, but there's a huge chance that geopolitics is also working quite hardly here. The situation in Ukraine, Russia tensions, and so on. So Nord Stream 2 as well, but it seems like nothing is going to change in the next few months. So it seems hard. It will be a challenge on the energy side, and I thought that it might help, for example, the renewables and alternative energy providers. And of course, at these price levels, they are becoming very, very attractive. But right now, the signals from Germany that they are still going to sit on the gas consumption. It seems like it cannot be a real alternative very fastly. It needs time. And that's why the oil and gas suppliers are very happy to get all these dollars that they can get. So it seems will be a challenge next year. And we could move on with that this challenge will move to the other sector, to financial sector. Because just last week, we have heard from US that inflation level rose to the levels that we have seen in 1982. And it seems that we are going to test the levels that are in 1980s, 81. We can remember that inflation by that time, I hope that won't happen, but the inflation by that time in the US stand some above 10%, and even in the peak it was 20%. And by that time, the rates for the loans were also 20%. So it's very, very dangerous situation.
20 times higher than they are now, essentially, 20 times.
Yeah, so it's 20 times. I guess that
probably even more, because now we have below 1%, so actually probably more even.
In times, it's tons, I would say, of times, because right now the rates for the loans is 0.2, so it's like 100 times.
Yes.
So
Yes.
I guess that we are not going to test that levels because it would be a catastrophe for the economy. But still, there will be a huge pressure, especially in January and February, because the levels that we are going to, the base of the last year is very low. And right now we are moving into very high prices with the energy. So it seems like the US is going to really test the inflation level that is 10 or even above. This means that the US Fed will going to react and going to increase the rates. And just tonight they announced that they are going to make at least 3 moves in raising the rate. So probably at least right now they are forecasting that the end of the year we will have 1% rates. But I'm a bit afraid that it might not help, because if you have an inflation in your yard like 10% or above, so 1% on percent point on the loans does not work much. So probably it will be a interesting year, and this means that there will be a change, some dramatical shift, I would say, that the shift that in the energy sector. So more and more investments will go to the alternatives, to the green side. And there will be a shift also in the financial sector, because the yields for the loans, for the bonds, and etc., it will definitely change. And it will be hard for those really who have no savings, who have no reserves for the next year, but because we will need those reserves to cover all that prices increase.
So, but actually, the increase of base rates by Fed and probably other central banks will follow. What is your opinion? How it will impact the energy sectors? Other business sectors, commodities. What's your kind of prediction?
Well, the increase of the rate is being done always to cool down the market that is too hot. So right now we really have too hot market. And this relates not only with the commodities, but with the equity, bonds, wherever we pick, whatever asset class we pick, everywhere we have record prices and so on. So this means that if the rates will be increased, so there will be a pressure on the market, to lower the levels of loans. And this means that the central bankers will want to get back those money that were printed out. And when money are the amount of money is being shrunk, so it will be pressure from upside on the prices probably. But this is a normal reaction of the market. It should be like that. So the market should cool down, but it seems like it does not want to get cooled down. And we have a very huge inertia here to move forward. So again, there will be a huge fight. Another thing is if the money price will increase, so the investments to do investments will be harder. So this relates to everything. New rig to build a new rig, or to open a new oil field or gas field will be not that cheap as it was before. And it also relates to the green energy as well. So this means
especially actually to green energy, because it requires a lot of investment.
They requires a lot of investment, and these investments are going from the government side, and also it relates with personal investments where people are investing. So this means before today, for example, everyone could take money almost for zero, and it will start to cost. So it will be also a cooling effect on this market. But still, I think that the trend in energy is quite to go up, at least for the next 6 months, and then we will see. And probably it is not very, I would say, it's not a very clear forecast for the next 6 months. We see that the situation is changing week to week. So at least I would say that we will have a positive trend, positive from the side of exporters. The prices will go up in January and February. And I do not know where's the limit, because what I saw today in Amsterdam is 1.5 euros per cubic meter of gas. It's something very strange. And for example, in the US, the gas is like 6 times cheaper rather than in Europe and in Asia. But there is no relief in Asia as well, because the China and India is having lots of troubles with the energy. So the consumption is huge, and it will be something. And it's also acting on another commodities as well. I just opened the chart to check, double check if that's the right number. For example, that kind of commodity like lumber, exactly over 1 month. So over 1 month doubled the price. So in the market. So this is also related with the energy, because well, lumber is used for like a commodity, but also is used like a fuel. So it's these kind of gas and oil price changes are moving the other commodities as well.
Most probably metals as well, probably, you know, mining, iron, copper, etc.
Yeah, we have also a peak in iron, for example. Just in a few days, for example, iron price jumped something like 12% in 2 days. So for example, copper is almost in a historical record highs, and so on. So this means that the pressure on the business will be very huge next year. And we had seen in Lithuania the example like. Fertilizer producer Hema has to stop their production because the gas prices are too high and there is no logics to produce the fertilizers. What does it mean? This means that the next year, and these kind of fertilizers factories are being stopped all over the world. So next year we will have a crisis of the fertilizers. The fertilizers prices will double probably, which means it will go into the price of the wheats, of the soys, and that kind of stuff. So there will be a challenging year next year, and we will have to be very, very, I would say, aware of these changes.
Okay, so but could you also maybe talk about more the correlation between gas and oil? You know, you mentioned that obviously there is a big discrepancy between the gas prices in Europe, in Asia, and America. Oil prices are actually, if you take VTI or Brent, they are very similar in that sense. Mm-hmm. So the oil market is more, let's say, evenly distributed worldwide. But you know, if you could tell us a bit more about the correlation, oil and gas. What is the correlation between these two?
Yeah. Before today, I would say that 10 years ago and in the past, there was always the front runner was oil. And if the oil prices is being increased or it's increasing, so with a small gap of time, the gas is being increased, because even in the Western world, there are even formulas where the price was it was counted from the oil price. The gas price was with a follower, and the situation changed probably this year very strangely, and it changed in the middle of this year that the front runner became the gas. The situation has changed, as I said, because of COVID. So first of all, because consumption of oil is very dependable on the COVID and the situation with that. And the gas situation is a bit different because it does not react to the COVID. And the next thing was that over this summer, somehow the Western world, and especially the Germany, managed to move into the winter season with a half-filled tankers. So this means we do not have the reserve that we had it was normal to have fulfilled these reserves like with a 70–80% level or even higher. And right now we are moving into the winter with a half-filled reserves, tankers, and so on. And this means that the gas is showing the trends, the new trends that are not related with the oil. Of course, oil has increased like 50%, but what we see with the gas, it is increased like 7 times over the last 12 months.
700%, yes, essentially.
Yeah. So it's enormous change, and right now probably the gas is a front runner, and it shows what the oil price might be. So these are changes. And another thing, of course, the reserves of gas in Europe are low. The demand in Asia is very high. And at the same time, for example, US has 5 times or 6 times cheaper gas. So this is also abnormal situation. And this abnormal situation means that the US is pumping as much as they can from of this gas. They are putting LNG, like pressured gas, and this pressured gas is being exported to right now to the Asia because there is a huge demand for that. And Europe is stuck with Russian gas because Norwegians are not able or capable to provide the amount that we need. And there are strange things with Russia happening right now because the pressure in pipelines is almost double lower than normally. So one thing that the Russia is pumping to Asia as well, and the other things, there are probably the risks that geopolitics is working here, and right now they are trying to negotiate in this way or terrorize the Europe in order to open up the Nord Stream 2, but we know what's the situation because Germany has stopped that project. So over this winter we will have a very interesting situation. But as I mean, the situation has changed with the gas and oil links to the price. So right now the front runner is gas, and probably this is the best forecast what might be with
You have
oil.
switched places essentially, gas and oil. Okay, but your personal opinion, prediction, I mean, if you would be to invest into any of the commodities, let's say oil, gas, I don't know, iron ore, anything else, what would be your kind of take?
Well, first of all, looking from classical investors' point of view, or theory classical, I wouldn't be very happy to invest in the commodities directly, because usually commodities have a huge risk portion, and the returns usually are quite low. But right now we have abnormal situation. So if I would like to, or I would get a task to invest in some commodities, I would better look at the shares or equity of the companies that produces commodities, because then you are getting the same impact on the price change of the commodities. But at the same time, we have company that has cash flows, has profits, earnings, etc. And also there is a bigger potential because when we are buying, for example, oil company, so oil company runs the fields that are not opened yet, or the oil is underneath of the ground. And this means when the prices is changing, so the analysts are recounting what is the reserves in the ground. And then we can get a bigger impact, or we can feel safer by investing into equity that or the company that is running the oil or gas or lumber or whatever it takes business. So it's a bit safer. And for example, if the prices would go down somehow, it's very hard to forecast why they should right now. But if the prices would go down, I would feel much safer invested in, for example, oil company that has fields, reserves, etc., and still are getting the cash flow. So the cash flow, I think, is the game changer right now. And again, getting back to the investments here, the environment of the market is changing, as we've spoken with the interest rates. They are going to increase and so on. So we would have to rethink our investments in all the ways as well, because before this year, everyone was keen investing in growth companies, because everyone was thinking about growth companies and the growth, etc., etc. But right now, probably with the environment where we have the interest increase, probably we should more look at the value companies, and to look more and more in the cash flows, get back to the balance sheets analysis, etc., because to run in the way that we were running for the last probably 5 years, for example, we even with the meme stocks like that occur, it's not the way that we're going to work the next year. And so these kind of commodities, energy companies are very interesting, I would say, for the next year, because it has value, and the value will be kept for the decades, I would say here, and it's much safer. So right now, at this environment, we should look for safeness with our investments rather than looking for the huge and very fast growth.
So cash flow, strong balance sheet, dividend returns, probably all of the above.
Yeah, like Warren Buffett said, one of his very good ideas, the famous investor, he said that we should buy the companies that we would happy to have, even if the stock exchange will be closed for the next 10 years. So and probably this idea is quite good for the present times, because we have to have strong cash flow, strong balance sheets, the companies that we cannot imagine the world without them. So energy companies, at the same pharmaceuticals, well, all these defensive sectors that are coming into mind when we are thinking of unstable period. So all this. So we have to switch the gear from the fast to cautious, I would say.
Okay, so a more cautious approach and the more, let's say, reasonable approach is due next year in comparison to the current overheated situation where everybody buying anything essentially.
Energy at this stage seems quite interesting. It's more interesting rather than it was before. Even if the prices are at record levels, but I think that what we have seen with the gas and and the price, so it seems like it's not the limit, and we will test new limits probably in the next few months. So,
what is your prediction about these so-called, horizontally or vertically integrated companies, like these big conglomerates, like I don't know, Royal Dutch Shell or Total or Chevron or any of these? What's your opinion? Which they usually have quite a diversified portfolio.
Yeah, I would say that this is quite a good picks right now that we can choose. Especially as I said, we are like a few years ago, my morning every started with a Bloomberg and the economical statistics. But right now, what I am doing every morning, I am just watching the Hopkins University data about COVID numbers and what they are in different countries or different regions. And I think that if we will see any relief of this Omicron, right now we are seeing like an increase in COVID cases, especially in London, and that kind of articles on Bloomberg, like they are saying, like London is becoming a ghost town right now because of Omicron. So
yes, the article on Bloomberg today. Yes.
Yeah, it's very nasty. It's very nasty, that kind of articles, and but hopefully this will move away probably, and probably with a huge probability. And when it will move away, we will have the same kind of situation when we had this year in May, well, March to May, when everyone started again to live their lives. And what happened? The energy soared because well, we know what's happened here. Everyone wanted to buy everything, wanted to move, to fly, to work, work and go to work, and etc. So these data are of Omicron and COVID is very important right now, and for energy sector as well. So if will that move away, we will get another push of demand, because the demand is right here, but it is being like colded, or it is being cooled down just temporarily.
Okay, okay, understandable. Very well. But what about renewables? You mentioned that renewables are actually the future, which is more or less obvious. Obviously, that the increase in base rates by the central banks will definitely, make the investments into renewables more costly, meaning harder. In the same time, the market for renewables, meaning energy prices, electricity prices, is also increasing, which is making renewables more attractive and more economically feasible. So, what is your personal prediction? Which way it's going to develop now? Well, these kind of a bit contradicting trends, increasing in prices, and on the other hand, increasing in capital.
Well, definitely the prices of the renewables, this will be also abnormal, because, well, the effectiveness of renewables is increasing every day, I would say. And this should mean that we should get a cheaper and cheaper energy from renewables, from solar, wind, and so on. But right now, probably the prices also of these energy generators will also increase because of few things. We have a terrible situation with employment, terrible situation, or good situation, how you evaluate it, but everyone in Europe has the job if he wants to work. And this means that the prices of the workers will also increase next year very sharply, because there is no people that additionally can work. And this is also related with the renewables, which means installation of them. The prices will go rapidly. I would say 15, 20%. It won't be a number that should make you fear of that, but it will be reality. Installation prices will go up. The next thing is when the energy prices is like, for example, in Lithuania, from the January the 1st, the businesses are going to pay new energy prices for electricity prices. And this price is going up like 3 times from the last year's level. 3 times. It's right now we are counting not in percents, but in times, everything. So what does this mean? This means that the demand for the renewables will be very big, and again we will stuck with it. We will have a huge, well, small bottleneck because we won't get the supply even of them. So again, commodities for renewables are going from China. The prices of getting a container by ship from China to Europe increased 6 times right now from the last year's prices. Again, times, not percent. So combining everything that, we will have shortage of renewables. The new installations will be lower probably next year. And it is again abnormal. So when it is going to stop that kind of process, I don't know. So right now we just can work with the scenarios, and those scenarios are like we should build them for the next 2 months probably only, because the forecasts are very, very unfriendly right now to make any forecast. So there will be tensions, there will be a challenge for the next year for renewables as well. And the prices will be probably, I guess that it will be, the price will double to install, for example, a solar panel next year, because of shortage of solar panels, because of shortage of workers, etc., etc. So it's not very, I would say, a good forecast for the next year. So it will be challenging, and those who have capital, that can control capital, probably they will get richer. And those who work from salary to salary, they will have huge problems right now, because you cannot escape the huge energy prices. you cannot install new renewables as well, so it will be harsh.
It is difficult indeed, but I know that you have to run and your time is limited. I would really like to thank you for these very, very insightful, ideas and elucidation of trends. And I'm sure we will meet again on our platform and discuss, what has changed in 1 or 2 months again, and then we can maybe reflect, whether our predictions were correct or not, or what has been different and what has been the same as predicted. So really, once more, thank you very much, dear Marius Dubnikovas, and to all our viewers, I would like to, remind you that you subscribe to our channel on YouTube and follow us everywhere on the social media and other possible channels. Thank you very much, and see you next time. Thank you.
Thank
Bye-bye.
you for the invitation. Bye.
Bye.